How much do mortgage rates really impact your buying power? Stay tuned. Thanks for watching this week's video. I'm Shirley with Shirley's Real Estate Group, John L. Scott, and this is the BS Real Estate Show, buying and selling real estate, that is. Last week we broke down home price growth versus appreciation, a crucial piece of the real estate puzzle. But today we're tackling another hot topic, mortgage rates. Where are they now? Where are they going? And most importantly, what does this mean for you as a buyer or a seller? So let's dive right in. Mortgage rates have declined this year. Let's start with the big question. When will mortgage rates come down? Well, good news, we're already seeing improvement since mid-January when rates peaked around 7%. They've been slowly declining. Over the past 6 to 8 weeks, rates have steadily dropped, offering some much needed relief as we head into the spring market. So what does this mean for you? Lower rates increase affordability and boost buyer confidence. So here's what Jessica from NAR says about mortgage rates. This is the lowest rate for the 30-year fixed mortgage in 2 months, marking 6 consecutive weeks of rate declines. It results in a monthly savings of $60 on a $400,000 home, which represents a 20% decrease from where rates peaked recently at 7.04%. This is $60 a deal breaker for someone purchasing a home? Perhaps not. However, it could influence a buyer's financial perspective, shifting from the mid 6% range instead of 7%. Ultimately, vibes rather than data could prevail. What does this all mean? There's a clear shift in buyer mindset happening right now. Mortgage rates are trending down, but here's the bigger picture. When mortgage rates decline, buyer confidence rises. Emotions play a huge role in home purchases, and moving from 7% range to the mid 6% range creates a sense of opportunity. Sam at Freddie Mac says the drop in mortgage rates combined with modest improving inventory is an encouraging sign for consumers in the market to buy a home. And truthfully, every quarter point counts. How a small rate drop impacts buying power. Let's talk about real dollars and cents. This chart shows how a small rate drop impacts what buyers can afford. If someone wanted to keep their monthly payment under $2,600, here's what their loan amount would be at different interest rates. Keep in mind, this is just principal and interest payments only, as taxes and insurance vary from property to property. So at 7%, they'd qualify for about $380,000 to keep their mortgage payment under $2,600. At 6.5%, they could afford $400,000. More buying power, more options, lower monthly payments, more savings, win-win for buyers. Every buyer's situation is unique, so it's always a good idea to check in with your lender to get the exact numbers that work for you. Business Insider is saying, if inflation continues slowing this year, we could see mortgage rates go down a little bit. Weaker economic growth could also help rates fall. Inflation is finally easing. Remember, high inflation is equal to high mortgage rates. But good news, we're seeing progress. This chart tracks the core personal consumption expenditure index, the Fed's preferred measure of inflation. The peak was at 5.3% in 2022. Today we're at 2.6%. The Fed's target is 2%, so we're getting closer. Why does this matter? When inflation drops, mortgage rates tend to follow. We're already seeing rates respond, but how much further will they go? There's still uncertainty, factors like tariffs, employment shifts, and economic policy that will play a role in what happens next. But if inflation keeps cooling, that's a great sign for mortgage rates and for buyers and sellers. Now let's talk about what to expect. Joel Berner from Realtor.com says, though mortgage rates have fallen over the past several weeks and look more promising to prospective home buyers, we are far from the home finance environment of the post-pandemic home buying frenzy when rates were below 4%, and we're unlikely to return to that. So we're not going back to 3 or 4% mortgage rates anytime soon. That's just not in the cards for the near future. However, we do expect rates to stabilize throughout the year, and we're already seeing some encouraging signs. What's your biggest concern when it comes to buying a home? Rates, prices, inventory? Let's keep the conversation going. Drop your questions in the comments and I'll be sure to cover them in a future video. If you enjoyed this content, don't forget to like and subscribe for more real estate insights. Well, that's a wrap, and I'll see you in the next video.